My name is Nurziani binti Rudi with metric number of 279147. We are from Group 6. We will present about Mudharabah account of Bank Muamalat and Maybank. First, I will present the introduction. The word Mudharabah is derived from the Arabic daraba, which means traveling for business. Technically, Mudharabah is a type of partnership where one party provides capital and the other party provides labor and management skills. Mudharabah is allowed in Islam because Mudharabah fulfills the need of different types of people. On one hand, there are people who have capital but they lack in entrepreneur and management skills. On the other hand, there are people who have entrepreneurial and business management skills but they don't have capital to do that. The contract of Mudharabah enables both parties to enter into partnership and make profit. The capital provider benefits from the expertise and skills of the manager. Likewise, the manager gets benefits from capital to invest in profitable venture and earn money. Before moving on to our main topic, let us discuss first the differences between Mudharabah, which is an Islamic investment, and the conventional investment account. Mudharabah account is an investment partnership whereby the investor, which is the Sahibul Mal, provides capital to another party or entrepreneur, which is the Mudharib, to undertake a business or investment activity. While profits are shared on a pre-agreed ratio, any loss of investment is borne by the investor only. The Mudharib loses its share of the expected income unless the Mudharib has been guilty of negligence or misconduct in its management, in which case he or she shall be liable for the losses. Meanwhile, conventional investment accounts operate on banking laws and financial practices as set by the country of origin. Conventional investment account consists of Gharar, Riba, and Maisir. Next, one key difference is that Islamic banks earn their money by profit and loss sharing, trading, leasing, charging fees for services rendered, and using other Sharia contracts of exchange. Conversely, conventional banks make their profits by charging interest and fees for services to customers. The next difference is in the investment activities. Islamic investment accounts are only restricted to halal investment activities according to the Sharia law. Activities such as liquor, pornography, gambling, adultery, and insurance are prohibited in Islam. Earning return through these investments are not allowed under Sharia law. Meanwhile, conventional investments activities may relate to unlawful activities in Islam. Although the return for these investments are more likely higher than the Islamic one, it is prohibited in Islam. Furthermore, in Islamic investment accounts, there is limited liquidity at the same time to generate revenue by investing in short-term and liquid securities. The investment activities cannot be done in government securities, short-term loans and bonds because of interest-based transactions. In contrast, conventional investment can create liquidity by issuing the bonds against their receivables. Conventional banks are also protected by central banks by providing liquidity in rainy days for interest.
There are a few comparisons that can be seen between these two products under Mudharabah, which is under from Bank Muamalat and Maybank. Referring to the table, Mudharabah product under Bank Muamalat is also known as Mudharabah Unrestricted Investment Account, or also known as Surya. The customer, who is known as the investment account holder IAH, will be the capital provider who places the investment amount to be managed by Bank Muamalat Malaysia Berhad. Any profit generated is shared accordingly to mutually agreed profit sharing ratio PSR, where it is derived from the performance of the allocated portfolio asset originated by and presently recorded as asset in the book of the bank. While under Maybank, it is Premier Mudharabah Account I, also known as PMAI, where the customers provide the bank with the mandate to make the investment decisions without specifying any particular restrictions or conditions. The bank will invest in the bank's selected portfolio of Sharia-compliant assets, which may give the high potential return to the customers or investors. Next, for the initial investment, Mudharabah product under Bank Muamalat needs only RM100 to invest. On the other hand, investors need at least RM1,000 to invest in Mudharabah product under Maybank. As both of the banks are from Malaysia, the functional and presentational currency is Ringgit Malaysia, which is also known as RM. Furthermore, for Bank Muamalat investors, the investment account holder IAH has the opportunity to take part in the prize draw and will have access to the following facilities such as debit card, automated teller machine ATM, and internet banking. Meanwhile, Maybank customers under Mudharabah product are eligible to withdraw anytime via over-the-counter, ATM, CDM, internet banking, as well as through the usage of checks if they have current or savings deposit accounts. Last but not least, we can compare the Mudharabah product under these two banks based on the eligibility. For Mudharabah under Bank Muamalat, Malaysian citizens and foreigners are eligible to join the investment account. Last, it is open for trust account for children under 18 years old, which is also known as the minors. For minors, the account must be opened and operated by their parent or legal guardian upon providing the birth certificate or my kid. In contrast, the Mudharabah account under Maybank is only open to individuals and the joint account of Malaysian citizens and foreigners.
Moving on with the issue of Mudharabah in terms of Sharia is nearly perfect. But other than that, there is an issue with marketability and agency problem. This is why most people prefer conventional investment compared to Mudharabah. First is marketability issue. Under this issue, there are 4 problems stated, which are non-guarantee investment, high risk compared to other akad, no backup by PIDM insurance, and no profit equalization reserve, also known as PER. This is an unrestricted investment account known as Mudharabah Investment Account and Premium Mudharabah Account I, where the customer provide the Muamalat Bank and Maybank with the mandate to make the investment decision without specifying any particular restriction or condition. This means the customer does not have any access or right to monitor the result and management made by the bank, especially if there is any claim for loss. In addition, the rate of return on risk when available is uncertain about bank return because they only know the exact amount after it expired. This is why the type of investment is considered as high risk and non-guarantee investment. Under IFSA 2013, all Islamic banks in Malaysia are no longer allowed to provide PER. Thus, it made the deposit for Mudharabah fully used to invest in business. Based on Mudharabah contract, it is considered as a deposit not payable even though in MSRS it is put on liability. That is why this type of investment product does not have PIDM insurance. Next is the issue about the agency problem. Under this issue, have stated 2 main problems which are investor bear loss while bank not, and bank have the authority to decide which business to invest in. The concept of Mudharabah investor, which is also called as Robuma rule, is to provide capital and bear loss or gain profit that occur. Hence, Islamic banks are very cautious in providing finance because the fund is most likely from the investor that invest their money in the firm. They expect their money to be in safe hands. Banks do not want to share any loss even though it is a loss in terms of time and effort. They only want to share profit. In other words, they want anything that can minimize losses and maximize profit. This concept of financing is difficult to implement due to its high probability of failure. as a result of various factors such as the entrepreneur that been chosen by the bank are lacking in skill and experience in doing business. The nature of Mudharabah, Rabuma do not have any access or right to monitor decision and management made by the Mudarib, which is a ban, especially if there is any claim of losses. Islamic bank must ensure that the selected business partner have the right experience and huge business potential to expand. The selection is difficult because it requires the study of various aspects of risk. Islamic bank should choose a company that have a long track record and acceptable financial performance before offering capital to selected partner. In the current context, to ensure the safety of depositor fund from being lost, the Islamic banking institution will only offer profit and loss sharing based financing to recognize big corporations.
Okay, hi, Assalamualaikum. My name is Warabatul Adawiyah binti Wan Sulaiman and my metric number is 281492. So now we move to the next part, which is the solution for both issues that has been stated from previous presenter. The first one is agency issues and the next one is marketability issues. Okay, as we know, Mudharabah is a kind of partnership where one partner gives money to another for investing in a commercial enterprise. The investments comes from the first partner, who is called Rabbul Mal, while the management and work are an exclusive responsibility of the other, who is called Mudarib, and the profits generated are shared in a predetermined ratio. So, to solve these marketability issues, the firm should choose Al-Mudharabah Al-Mutlaqah, which is it happens when Rabbul Mal gives full freedom to Mudarib to undertake whatever business he deems fit because it has low risk. This is called as unrestricted Mudharabah. However, Mudarib cannot lend money to anyone without the consent of Rabbul Mal. Mudarib is authorized to do anything which is normally done in the course of business. However, if they want to have an extraordinary work which is beyond the normal routine of the traders, he cannot do so without express permissions from Rabbul Mal. He is also not authorized to keep another Mudarib or a partner and mix his own investment in that particular Mudharabah without the consent of Rabbul Mal. A Rabbul Mal can contract Mudharabah with more than one person through a single transaction. It means that he can offer his money to A and B both, so that each one of them can act for him as Mudarib, and the capital of the Mudharabah shall be utilized by both of them jointly, and the share of the Mudarib. Okay, so next we will discuss about the solution for agency problem, which is incentive compatible contract. One way to overcome this dilemma is by designing an incentive contract. Based on the incentive contract, the principal will pay the agent for carrying out risky decision making, and the principal will receive a return profit for investing in that venture. As demonstrated by the Marzo and Fisherman 2006 in static theory, cash incentives can be used to reward an agent's good performance. Meanwhile, in a dynamic setting, the agent should be rewarded with a higher share of future cash flows if he succeeds in the venture. The optimal contract also can be achieved if the incentive is compatible. This will motivate the agent to perform the task assigned by the principal to the best of his ability. It should be noted that investment through Mudharabah contracts are extremely risky as profits are not confirmed. Therefore, Priestley and Session 1994 proposed the implementations of incentive-compatible contracts to allow a more efficient information disclosure between the contracting parties. For example, incentive payment through bonus shares encourage the agent to perform well. This contract becomes a tool to safeguard the terms of contracts agreed by both parties. Information regarding the true characteristics of the entrepreneurs, the objective of the Islamic banks, and the performance of the venture must be transparent to the contracting parties to ensure efficient management. This will contribute toward a higher turnover of the projects.
In conclusion, financing through Mudharabah does never mean the advancing of money. In Mudharabah, it means to participate in the business. An investor or financier must share the loss incurred by the business to the extent of financing. The partners have the liberty to determine with mutual consent the ratio of profit allocated to each one of them, which may differ from the ratio of investment.